So this month I've made over $16,000 trading, and as you can see, I've only traded for 9 days and we still have about a week and a half left of trading. And guys, it is so stupid simple to get to the point where you're making $10,000 to $20,000 a month as a trader. All I did was follow one system, use one indicator on my chart. I didn't do anything different. All I did was use one strategy. And so in this video, I'm going to show you the exact strategy and the exact indicator that I used to get to the point where I'm making over $1,000 a day and even $6,000 on the 19th of May. So if you watch this video all the way through from start to finish, you're going to learn everything that you need to know about trading using this one simple indicator and honestly get to the exact same point that I've gotten to in my trading, which is over $20,000 a month. All right, so for this insanely simple strategy, we need one indicator. So go over to your indicators tab and add the moving average exponential. All right, so we've added the 9 EMA to our chart. What we're going to do is double click this, and I like to just change this color to yellow. Now, what the 9 EMA is essentially going to be a price line that tells us exactly what the trend of the overall price has been for the last 9 candles. So what it's going to do is it's going to take these last 9 candles and it's going to put the average price of all of these candles into this line and create a smooth, nice trend line with your chart. Now, one thing that you will notice is that this line right here stays very, very close to where price actually is. And so we can have a very good idea as to where price is most likely going to go by just paying attention to where this line already is. Now, I'm going to show you this entire trading strategy that revolves around this one simple indicator, but the first thing we need to understand is that indicators are lagging behind price action. So what that means is that we most likely need to actually use price action first, and then we can use the indicator to support that action. So before we get into the strategy, I want to break down a little bit about price action. That way we know exactly how to use it. And then when we start to add the indicator, it's going to make things a whole lot easier to understand. Now, we have 2 main parts to the candle, right? We have the wick and we have the body. And remember, this is all going to link to the strategy later on. So I want you to watch this entirely and stay focused, okay? So these 2 parts of the candle are going to mean something different, right? This first part right here is going to actually indicate pressure. So what we're going to notice here is that when we have long wicks to one direction, that equals pressure in the direction that the stock is currently going. So for example, this wick right here shows bearish pressure, right? Because we have this wick that is pulling the stock down, and then we end up having a ton of movement to the downside. So the size of the wick determines the amount of pressure that is on that candle. So for example, let's say we have 2 candles, one that is like this and one that is like this. Which one would be demonstrating more bearish pressure? Which one would be showing that we have a lot more bearish potential on this position? Well, think of it this way, right? If we think of buyers and sellers, sellers are going to be wanting to push the stock down. Buyers are going to be wanting to push the stock up. It's pretty simple, right? And so when we look at these 2 candles, well, what is happening in this candle? What's happening here is that we have a green candle that pushed all the way up, but then who ended up taking over, right? Sellers, because sellers ended up pushing this all the way back down to close at this point, because this could have easily closed here, right? If buyers had the control, this could have easily closed here. But instead, what ended up happening was the sellers had so much pressure that it brought this candle down to close at this point, versus this candle here where we had just straight buying momentum. Versus this candle here where we don't have that much selling pressure, right? This means that we're most likely just looking to continue to the upside. Now, we have this second part of our candle as well, which is the giant body of the candle. This right here is going to indicate momentum. And as far as momentum goes with stocks, it's pretty self-explanatory, right? The larger the candle body, the more momentum we have to the direction that we're looking for. So for example, let's say we have a bearish move that's coming up here. Let's say that we're pushing up and we're looking to see, hey, are we looking to continue or are we looking to reverse? Well, if we have this gigantic red candle that ends up wiping out all of this trend that we had coming up, it's very, very safe to say that we're most likely going to have a lot more selling momentum than we are going to have buying momentum, because this giant red candle just swept all of these candles out of the way. Versus, for example, let's say that we had something like this. We had a small green candle. Well, this shows that we don't really have that much buying momentum either, right? So what we're looking for is the size of the body. The size of the body determines what the overall momentum of the stock is looking like. And so when we use this EMA strategy, the one thing we want to pay attention to is when we come up to this level, when we come up to our line here, we want to see 2 things. what is the pressure looking like and what is the momentum looking like. If we can accurately decide what these things are doing, the pressure and the momentum at the point where we get to this EMA, then we can make a very, very good prediction as to where the price is most likely going to go. Are we going to break straight through? Are we going to break straight through and retest? Or are we going to just reject straight off of it? So you really only have two things that you can do when you're at a level. You can either break it or you can fail it. And so what we need to do is use these two concepts to determine what's most likely going to happen at this level, right? So we want to make sure that we have an understanding of price action and how it actually works at these levels, because we have this line here. And if we don't know what we're doing with that line, then it's not going to make any sense. For this strategy, what we want to look for is we want to look for heavy pressure and we want to look for heavy momentum. These are the two things that we're trading. And the reason why I like to say that is because there's going to be times like this where you see this at an EMA and you're like, I tried to buy and it didn't work. Well, remember, we need to have heavy pressure and heavy momentum. So for this strategy, we need to see large bodies of candles and we need to see some good reactions at the EMA. So these wicks need to indicate heavy pressure at the EMA that shows, hey, we're most likely going to continue going to the other side. And then we need to have large bodies that indicate that we have a lot of momentum going our way. If we can get those two things, then we can guarantee that this strategy will work almost 80% of the time. And for this strategy to work, the main thing we need to see is clear movement, clear trend in one direction, right? If we end up seeing something like this, there is just no way to determine what's actually happening in the market. And so even if there is a super smooth EMA in the way, if the market's just chopping sideways, the market's just chopping sideways. So what you need to do is you need to be able to identify the overall trend, right? We need to identify if we have lower highs. We need to identify if we have lower lows, right? We need to know where the market is going. And if we know that, we can just hop in the direction with the trend. And that's what these EMAs do best. You could be in a different stage where you have no clue how to find the trend overall. What I could do here is I can add another moving average. And so with this moving average, we can just go to the settings here, go to inputs and change this length to 200. This will most likely tell you the overall trend of the market, right? So if we are below this blue line right here, chances are we're going to be in a bearish market. And if we're above this blue line, then we're most likely going to be trending bullish, right? It's a very, very easy way to be able to find trend, especially on higher time frames. So if we go to the 15-minute, the 1 hour, we'll be able to see pretty easily where this overall trend is. If we look at this line, we know that on the 1 hour, we are overall bullish all the way up until this point right here where we were actually bearish. And you can see we have a lot of movement here. So there are times where you can see easily, okay, we're bearish, okay, we're bullish. Now, if you have those two things down, I expect you to be writing notes on this. If you have those two things down, then you're pretty much good to go. We need to now talk about the EMA strategy. This strategy is so incredibly simple, so stupidly simple that honestly, if you just follow one set of rules, it makes your life a whole lot easier. And so what I'm going to do here is I'm going to draw a line. We're going to pretend that this is our EMA here. Now, like I told you guys before, we are looking for heavy pressure and we're looking for heavy momentum. So when we are trading this EMA strategy, the most important thing that we want to pay attention to is our reaction. What is happening when we touch this line, right? So no matter what happens, we want to make sure that we are not taking a trade until we are at this EMA. A lot of people are going to see the EMA and they're going to see that price is all the way over here and they're going to end up taking a trade and it's going to go right against them, because what is price most likely going to do? Well, remember, it's an average over the last 9 candles. So what's most likely to happen is we're going to rubber band back to this line at some point in time. So if price goes way off of this line, for example here, we come way off of this line all the way down here. What's most likely to happen? Well, remember, it's an average. So it's going to probably reverse all the way back to this line. Now, as you can see, lots of times we have reactions at the line. We'll come up to the line and then immediately shoot straight off of it. We come to the line again, immediately shoot straight off of it. Come up to the line again, chop for a second, shoot straight off of it. So as you can see, there are reactions that happen at this line every single time we get there. Check it out. We break up here, come all the way down, bounce off this line again. Come down again, bounce off this line again. So we can see specifically exactly when the market is most likely going to bounce by just paying attention to this indicator. Now, as you can see, when the market is moving sideways like this, there's no way to determine if we're able to enter any positions or not. And like I told you, it's not going to work if the market's moving like this. So we need to first establish that we have trend. Once we have that established, we then need to establish that we are getting a strong reaction with strong momentum and strong pressure off of the EMA. If those two things are done, then we'll start to see a much, much smoother position. Now, there's two main things that are going to happen when you approach this EMA, right? We already talked about reactions, so we know that we're going to get a reaction once we get to this EMA. So we're going to come up to it. There's two things that can happen. The first, we show a lot of pressure to the downside, and we show momentum to the downside here, causing us to just reject straight off. And the second thing that is most likely to happen is we come up here, we show our reaction, but we blow straight through the EMA. We will then come down and retest this EMA and then continue straight up, right? Those are the two most likely things to happen. Either we're going to come up, retest the EMA, and then show pressure to the downside, or we're going to break the EMA, retest, and then continue with strength to the upside. These are the two things I want you to pay attention to when we get to an EMA. So for example, let's say that we've got a nice downtrend here that comes through the EMA, and now we're looking to retest that move. Well, what's most likely going to happen is we're going to retest the EMA right here. And what's going to happen is we're either going to see a reaction that ends up pushing straight through, or we're going to see a lot of heavy selling pressure that's going to make sure that we go back to the downside. And so what I want you to pay attention to is the size of this wick here, right? This size of this wick shows a lot of selling pressure. And so this selling pressure means that we're probably going to push to the downside. Now, what's probably going to happen is on this next candle, if we get a massive candle body that ends up breaking these lows and breaking all the rest of these lows, then we're probably going to see a downside move because of how much momentum that we have on the chart. So when we choose this next candle, the one thing we see is, okay, we tried it, we failed it, so there's no entry yet, right? We don't have the momentum for it. But on this next candle here, you can see that we have a ton of momentum that clears out all of these lows, right? It clears out everything. So this is the obvious area to enter. If we see that we have a massive wick off of this EMA, we can enter right at that point, right? There's two different areas. We can enter short at this point here and put our stop loss on the other side of the wick, or we can wait until we break lows and put our stop loss on the other side of the EMA. And so this EMA strategy is really simple. It's just price action and one indicator. You follow what's going on with price action and it will guarantee that you can just have the same exact outcome every single time, right? So we know, again, we are in trend. We're all the way this far from the EMA. So what are we most likely to do? Well, we're most likely going to come back and we're going to retest this move. So what do we need to do? We need to figure out what reaction we're getting at this level. This looks like we're getting a ton of bearish pressure, right? Bearish pressure. Like I talked about before, it's all about pressure and it's all about momentum. So here we're getting bearish pressure. And what ends up happening on this next candle is very evident that it's the exact same thing that happens every time. We come up, we retest the thing again, we fail, and now we have a ton of momentum to the downside. And so what I always do is I just enter when we break lows. If we break lows and I enter, I set my stop loss above that EMA, and then we can set a target for, honestly, at this point at lows, and we can see if this continues even lower. But for the most part, I'd probably just set my first target to lows at this point. So as you can see, this ended up actually running pretty far, ended up running all the way down here, which gives us a pretty good risk to reward. Now, all we need to do is just pay attention to the reaction that we are getting at our level. And remember, there's two different types. So the first reaction, like I said, is going to be that straight rejection. And the second is going to be a break of the EMA, a retest of the EMA, and a continuation. So what it's going to look like is something like this. We have a massive break here with a lot of bullish momentum, right? We have this big candle body. This shows us that we have a ton of momentum to the upside. So there's no reason for me to enter bearish at this point because I know we're probably going to be bullish because of how much momentum this candle is seeing. So we break this EMA here, right? Now all I'm looking for is a retest down to the level, and I'm looking for a continuation. So as you can see here, we have a retest that comes down to our level, and the next candle comes up for a continuation. And so you can draw this out over and over and over again, and it works literally every single time because of how easy this strategy is. And if we keep playing it, we actually get to the end of the day here. So things pretty much just fizzle out. But those are three main positions right there, taking this exact same strategy, and you can just copy it, copy paste over and over and over again at this EMA, and it is almost guaranteed. So it starts to get very easy to see exactly what's happening once you get here, right? You can see we're far away from the level here, and we show a lot of buying pressure right here. Cool. So what's most likely going to happen is we're going to come down and we're going to retest this level. Well, when we retest the EMA, we need to identify where's the pressure and where's the momentum. And then we want to just enter with that direction, right? So if we have momentum and pressure in one direction, we enter with it. Most likely, ideally, it's going to be in the same direction as the trend. So this here, for example, we come up to the EMA. Here's your EMA, and look what happens. Sellers have pressure here, right? So if those sellers have pressure, if they're the ones pushing the stock down, and this next candle has enough momentum to come down and break these lows, well, then we have a very, very easy setup, and we can just set our stop losses. Why is this candle so large? We can set our stop losses all the way here above the EMA. Your stop loss is most likely always going to go on the other side of the EMA, right? That's pretty much always where I'm going to put it. So as you can see, all we do is we just drag this down, and you can see that this ended up going for a very long time. And so this position was entirely determined off of just one small move at the EMA, and it's so powerful. Now, I've shown you multiple examples of this strategy working in real time, but the main question that you might ask is, well, how do I know when to sell, right? This strategy is so easy. We can see, all right, we break a level, we come up, we retest, and then we continue. But how do I know where to actually set a target, or how do I know when to exit? This strategy, the reason why it is so incredibly powerful is because you have the ability to hold a position up until the point where you just break the EMA to the other side. It's so simple, it's not even funny. You hold the position all the way into the point where you break the EMA. Because remember, the EMA is the overall trend of the last 9 candles. And so if we end up breaking that to the upside, well, that's showing that we're probably maybe going to make that move to the upside, or we're looking to at least chop, right? Here we end up just chopping. So this is not a bad area to get out at all whatsoever. And so no matter what, all we're doing is just holding until the EMA breaks to the other side, right? Obviously, you probably would have taken a trim somewhere along this, but let's say you didn't. All you're going to do is you're going to exit here in the green, but obviously it's not going to be full profits. Same thing goes here. We come up, we break these highs, and we continue all the way up here. You probably caught a trim at one point in time here, and you hold the rest all the way until you break the EMA. And so you're just doing this for every single position. Honestly, guys, if you can just replicate this strategy, steal this indicator, put it on your chart, replicate this strategy, and just do it over and over and over again. Make sure you have trend. Make sure you know where the pressure and momentum is, and then take the reaction off the level, and you will see so much success from this. It's not even funny. And if you are struggling and these strategies are just too difficult to understand, they're too complex, or honestly, you're just struggling with trading as a whole, I completely understand. I've taught over 400 people how to trade from start to finish and make over $10,000 per month as a day trader. So if you want to join a one-on-one mentorship program and actually work directly with me, I can literally break down every single concept of trading for you. That way you can make it to these months that I've been doing for the last 3 years. So if you want to do that, scroll down. It's the first link in the description. Click on that link and apply to join. It's changed a lot of people's lives, and I hope it'll change yours as well. And honestly, if you just want to watch more strategy videos of me, here's another strategy video right here that I use daily to make over $20,000 a month as a day trader. So if you want to use that, click it. It's right there. It should be popping up on the screen somewhere. Use this strategy. It makes so much money. I don't understand why people don't do it. I'll see you later. Bye.